Why, hello there, Hector Davil here. Welcome to this new video where we are going to be talking about searching for trends, or more specifically, how to search for those trends, okay, for those beautiful 3SMA trends. Now, I personally like to broaden up my range of options as far as, well, the different currency pairs that I like to trade. Okay, in fact, out of the 8 major currencies, I basically like to cross them all together, and therefore I search for trading opportunities in all 28 major currency crosses. Now, these are the 8 major currencies: the American dollar, the euro, the sterling pounds, the Japanese yen, the CHF, the Swiss franc, the Canadian dollar, the Australian dollar, and the New Zealand dollar. Right? Well, if you actually cross them up, if you find all the different combinations, okay, you will see that you actually come up with 28 major crosses. All right, euro against the American dollar, sterling pound against the American dollar against the Japanese yen, etc., etc., etc. You may want to pause the video and write down all this list of again 28 major currency pairs in the forex market. I personally don't like to try exotic stuff such as the Mexican peso, the Hong Kong dollar, the Swedish krona, that kind of stuff. Those exotic currencies. I'm just not interested. Usually, the trading volume on those exotic currencies is just not large enough. All right, so I would rather just stick to the 8 major currencies in the in the forex market. Okay, now. That's a total of 28 crosses, but the truth is that trends develop on any time frame. Okay, you can get solid trends as per the 3SMA conditions on the 5 minutes time frame, on the hourly time frame, on the 4 hours time frame, on the daily, on the monthly time frame. It doesn't matter. You can get those 3 simple moving averages in order, parallel to each other, no crossover, etc., etc., etc. on any time frame. The only difference is that a trend on the 1 hour time frame may last for 1 or 2 days, whereas a trend on the monthly time frame may last for up to, 3 years maybe. So, like I say, depending on your time frame of choice, you can certainly find valid, healthy, solid trends on any time frame of your choice. Okay. Now, obviously, if you focus, let's say, on the 15 minutes time frame or in the 30 minutes time frame, at any rate, let's say you are an intraday trader, you will always obviously find more trading opportunities, but shooting for smaller profits, smaller individual profits on each individual position. So let's imagine you search for trends on the 15 minutes time frame or the 30 minutes time frame. Trends come and go on those time frames on a daily basis, and well, you may find a valid trading opportunity every single day, but you may be shooting for just 25, maybe 30 pips per each individual position. Whereas if you search for trends on the daily time frame, well, then you may only find one valid trading opportunity per week, maybe 3 valid trading opportunities per month. But obviously your profit taking levels will be much larger. Let's say you will be shooting for 250 pips on each consecutive swing, and well, therefore it's just a matter of personal preference. Okay, whether you want to trade whether you want to follow a high frequency trading approach, or whether you want to be more selective, taking maybe fewer trades but shooting for larger profits on each individual position. Okay, all in all, we have multiple time frames. The 5 minutes, the 15 minutes time frame, the 30 minutes time frame, the hourly, the 4 hours, daily, weekly and monthly. Okay, I'm not going to take into consideration the 1 minute time frame. In my opinion, that's just crazy. Okay, it's just it's just crazy to search for trading opportunities on the 1 minute time frame. I am not even very fond of the 5 minutes time frame. In my experience, reading price action on such a short time frames, it's rather difficult because there is a lot of market noise, random market noise going on the very short time frames. Actually, my favorite time frames are anywhere between the 30 minutes time frame and the weekly time frame. 30 minutes, 1 hour, 4 hours daily. Those are my favorite time frames. But at any rate, like I say, trends do develop on any time frame. And now, if you actually multiply all those different all those different time frames with all those different currency pairs, well, you get, I don't know, 100 different permutations, different combinations of time frames and currency pairs. So as you can possibly imagine, searching for those trends, it can get rather difficult, or, well, maybe not difficult, but indeed time consuming. Okay, at the end of the day, there are plenty of different currency pairs and plenty of different time frames that you need to come through in order to spot those trends. Okay, in order to know which currency pair and on which specific time frame the 3 simple moving averages are actually falling in place as we like them to be. Okay, now, as I was mentioning before, I like to keep my my range of options as broad as possible. All right, so just as I basically search for trading opportunities, no matter the currency pair, basically I follow them all, searching for trading opportunities, I do exactly the same with all the different time frames. I trade just as, I like to trade just as much the hourly time frame as I do, I don't know, the weekly time frame. I don't care. Okay, a trading opportunity, or rather a valid trading opportunity, is a valid trading opportunity no matter whether it's an intraday trading opportunity or a long-term trading opportunity. What does it matter whether I score my profits on the intraday chart or on the long-term charts? I don't care. All right, so I follow every single currency pair on every single time frame, and wherever I find the 3 simple moving averages falling in line, that's the chart and that's the time frame I tried. Obviously, if they fall in line, let's say on the 1 hour time frame, I know that I may squeeze just 30 or 40 pips out of that trade, and that I will be done for the day in 2 or 3 hours. Okay, that's gonna be an intraday trade. In the other hand, if I find the 3 simple moving averages, if I find my trading opportunity on the weekly time frame, I know I am going to be I'm gonna be involved in that trade for probably 3 or 4 weeks. Okay, it's gonna be a long-term trade, but I know that at the same time I'm gonna fish, let's say, 300, 400 pips out of that position. So, like I say, to me, it doesn't really matter which currency pair or which time frame gives me the trading opportunity, as long as I profit from the forex markets. Okay, so now the question is, how do I actually manage to comb through all those different time frames and all those different currency pairs without going crazy? Well, there are 2 feasible ways of keeping up with your charts. Okay, it's not that difficult. Don't you worry. I'm not gonna ask you to stick to your monitor 24/7. It's not necessary. Okay, there are 2 different ways to spot those currencies, those trends on every single currency pair and on every single time frame. Well, alright then, let's start off with the old school way, okay? The old-fashioned way, which is, in a nutshell, to physically monitor all the different currency pairs and to take note of, those few ones where the 3 SMAs, the 3 simple moving averages, are plotting in order. Alright. Anyway, please take a look at my screen. You can see a number of small charts. Actually, we have 28 small chart, basically one chart for every currency pair, and as you can see, they are all set to the same time frame. We have the American dollar against the Swiss franc on the 4 hours time frame, the American dollar against, the sterling pound against the American dollar on the 4 hours time frame, the euro against the American dollar on the 4 hours time frame, the American dollar against the Japanese yen on the 4 hours time frame, and so on and so forth. Okay, the Australian dollar, the Canadian dollar, the euro against the sterling pound, etc., etc. So basically all the different currency pairs set to the same time frame. Now, as you can see, the charts are zoomed out, and we have the 3 simple moving averages also on each of those single charts, right? So now what we would do is to simply, take a look at, just a quick look. There is no need to actually zoom in at all, just, to have a visual reference in order to determine which of them, in which of them the 3 moving averages are in order, parallel to each other, etc., etc. So we can see how the American dollar against the Swiss franc is uptrending. So I would take a quick note on my notepad, the Swiss C on the 4 hours time frame, uptrend. Now, sterling pound against the American dollar, we can see how the moving averages are pointing down, parallel to each other, etc., etc. So we would take a quick note. Sterling pound against the American dollar, 4 hours time frame, downtrend. Same thing for the euro. Okay, downtrend. The American dollar against the Japanese yen is not really trending at all. Okay, take a look at how the moving averages are rather ugly, aren't they? Multiple crossovers, pointing flat, etc., etc. So no trend there. No trend either on the Australian dollar, because if you notice, the 30 a simple moving average is already pointing up, right? So no trend there. Next one up, the Canadian dollar, a crossover there. They are not in order, so no trend in there. We have no trend either on the euro against the sterling pound. Price has just touched the 100. We also have a crossover there, so not really any trend in a scenario there, right? We could have, even though this is a really ugly trend, but at any rate, we would take a quick note on the euro against the Swiss franc, same thing on the euro against the Japanese yen, and so on and so forth. Actually, the most beautiful trends on this specific time frame are, obviously, let me take a quick look. We have the euro against the New Zealand dollar down here. Beautiful moving average formation. Please mind how those moving averages are totally parallel to each other. Okay. The New Zealand dollar against the Swiss franc has just seen a crossover there, so unfortunately that's not. And anyway, we can see how the swinging pattern has broken. Okay, now we are not. We failed to score a higher high. In fact, we are now scoring lower highs. Okay, so the swinging pattern is broken there. I keep on monitoring, see if I can actually find. This one, the euro against the Canadian dollar, also has the moving averages pointing nicely down, and price keeps on scoring lower swing highs and lower swing lows. So this is certainly a downtrend. Pretty much the same thing on the euro against the Australian dollar, etc., etc. Basically, again, from a visual point of view, we would take quick notes on our notepad as far as the 4 hours time frame. Now, we would go and we would simply conduct exactly the same exercise, but on the different time frames. Down here, we can have access to all the different profiles. I have set exactly the same approach to every single time frame. So I have a different profile for all 28 currency pairs, but again set to different time frames. Now that we've completed the 4 hours time frame, let me now zoom into the daily time frame. Okay, 3 SMA daily time frame. I click on it, and again, now we can see how all those 28 currency pairs are set to the daily time frame. So we would just do exactly the same type of exercise. Okay, I would simply take a quick look into the different currency pairs and take notes of those where the moving averages are looking nice and dandy. For example, the euro against the American dollar daily time frame, beautiful downtrend there, right? The euro against the Swiss franc daily time frame, beautiful downtrend. isn't it? What else do we have here? Oh, the euro against the Australian dollar daily time frame. Man, this is really beautiful downtrend. Please mind how extraordinarily parallel those moving averages are. All right, it just cannot get any better. That's a textbook prototypical downtrend. Pretty much the same thing on the euro against the Canadian dollar. Okay. What else do we have here? The Australian dollar against the Swiss franc daily time frame, nice uptrend there. Pretty much the same thing here. Canadian dollar against the Swiss franc daily, another nice uptrend there. That's pretty much it. Maybe the euro against the New Zealand dollar, also a downtrend. So again, I would take a quick note of those currency pairs that I like, all right, on my notepad. And then I would move on to the next time frame, maybe the weekly, maybe the 1 hour time frame, etc., etc. It's entirely up to you to decide which time frames are your favorite one. Again, I personally like to monitor them all right, and then I make a quick selection. All right, a quick selection of the best looking currency pairs as far as the 3 SMA formation. For example, this one, the euro against the Australian dollar, would certainly go into my final list. Okay, because price is certainly swinging very harmonically of the dynamic area. All right, and all those moving averages are nicely pointing to the same direction, parallel to each other, etc., etc. So again, at the end of the day, what I would do is to simply pick the best, I don't know, let's say the best 8-10 combination of currency pairs and time frames, okay, and then I would just simply focus or spend the rest of my day following those cherry-picked 8-10 best looking combinations of currency pairs and time frames. That doesn't mean that I have to select all the different currency pairs on the same time frame. Okay, I can have, well, for example here, the euro against the Australian dollar on the daily time frame, but then I may have the sterling pound against the Japanese yen on the 1 hour time frame, etc., etc. That means that on the same day I may take simultaneous trades. On some currency pairs, I will trade them from an intraday point of view, whereas other currency pairs, I will trade them from a long-term point of view. As I was mentioning before, I don't really care where my profits come from, or what time frame, or what currency pair my profits come from, as long as I get my profits, right? As long as I get my trading opportunities. And again, the broader the range of options that you gather, throughout the day, the more options you will have. Okay, the more chances you will have to find decent trading opportunities, and that's what's all about. Now, manually combing through all the different currency pairs and time frames may be a little bit time intensive, a little bit too much time intensive, and I actually agree with that. Okay, actually, once you get the hang of it, you can actually go through all the currency pairs and time frames in maybe 20 minutes. Just at the beginning of your trading shift, at the beginning of your trading session every morning, you should conduct that exercise, and will take you no more than 20 minutes, again, once you get the hang of it, right? However, in order to, make it a little bit more, a little bit more convenient, so to speak, I asked my personal coder, my personal programmer, to develop an indicator for me, okay, a special indicator for me, and that's what I call the 3 SMA trend filter. Okay, the 3 SMA trend filter. Please take a look at my screen. We still have different small charts signifying every single currency pair, every single major currency pair in the forex market. For example, down here we have the euro against the American dollar on the 4 hours time frame, but it doesn't really matter what time frame you set it to. And down here we have some weird cycles there. Do you see those weird cycles there? Well, each different cycle represents a different time frame. We have the 5 minutes, the 15 minutes, the 30 minutes, the hourly, the 4 hours, the daily, and the weekly. Well, what this indicator does basically is it reads the way the 3 SMAs look like on those specific time frames for this specific currency pair. If we get a gray circle, it means that at that precise time frame, that currency pair is not trending. If we get a red circle, it means that it's downtrending, and if we get a green circle, it means that it's uptrending as per the 3 SMA conditions. Okay, again, basically my coder simply programmed those trend conditions that we saw on an earlier video, and we just made sure that we read the trend conditions on every single time frame at once, just to make it more convenient. So we don't have to manually circle through all the different currency pairs. Okay, all the different time frames. So just by taking a quick look onto the euro against the American dollar, I know that we are having a downtrend on the 15 minutes time frame, the 30, the hourly, the 4 hours, and the daily. As you can see, this is the 4 hours time frame. 4 hours time frame indicator is calling a downtrend, and well, obviously, as per the moving averages, we are simply downtrending. Okay, clearly downtrending. Now, there are two things that you need to keep in mind, that you need to take into consideration. First of all, the indicator is just that. It's just an indicator, okay, a little piece of software. The point of an indicator is to make your life as a trader easier. It's not there to replace yourself as a trader, okay? Now, what I'm trying to say here is that just because the indicator is calling a trend, okay, in this case, for example, in the case of the euro against the American dollar, a downtrend, you should still visually confirm the signal called by the indicator. Okay, again, the indicator is just a piece of software. It's not intelligent, it's not smart, and it's not a trader itself. All right, it's just programmed to notify you whether the simple moving averages apply specific conditions or not. But at any rate, it's not a trader. You should still confirm, okay, the signals called by the indicator. And second, you are not required to trade or to search for trading opportunities on every single time frame the indicator is calling for a trend. Okay, let's analyze the euro against the American dollar. Let me actually expand this chart. Just give me a second here, guys. Just gonna try to expand it for a clearer picture. I'm gonna zoom in a little bit there. All right, there we are. I think that's good enough. So the euro against the American dollar on the 4 hours time frame is calling for it's calling for a downtrending price action on multiple time frames, all right, from the intraday charts, okay, all the way to the daily, to the longer time frames. Okay, so we are to pick the best looking time frame of all in order to trade the euro against the American dollar. All right, again, we are not going to be searching for trading opportunities in every single time frame. We would simply go crazy if we did that. We are going to select the best time frame for this specific currency pair. So what we are going to do is to simply visually take a look into every single currency pair. Let's start off with the daily. All right. Okay, this is the daily. The moving averages are obviously pointing in the same direction, all of them parallel, etc., etc. Rather harmonic price action. I like that. Please mind that that's very important, guys. You want to see harmonic price action, harmonic waving price action. Price now is rather far away, okay, from the dynamic area of support and resistance. Please mind that we will need to wait for a pullback, okay, somewhere in this area to search for our short opportunities at that point. Since this is the daily time frame, that's something that's not going to happen today, okay. The euro, if it is to indeed retrace back to somewhere in the area of the moving averages, well, it will take a few days to retrace up. So even though this is certainly looking good, and I will certainly be looking to try the euro against American dollar on this daily trend, it's something that's not going to happen today, right? So let's move on to the next one, the 4 hours time frame. All right. Moving averages also pointing down. I'm not quite liking the waving pattern. small swings there, a massive swing here, yet another massive swing. Well, the dynamic area of support and resistance is indeed holding price. Please mind how beautifully the moving averages are holding price, and therefore new swings are taking place right off or starting off the dynamic area of support and resistance. That's always a good thing. Well, yeah, I guess it's okay. Still, we will need to wait for a pullback for the moving averages to catch up with price, and from there that's what we would search for short opportunities. If we were to enter the trade, if we were to enter short at this point, we would be simply too far away from the moving averages, and that's not an efficient point to enter the market. Okay, you will see in future videos, whenever I actually talk about entering the trade, you will see that it's not really efficient because you are too far away from the optimal entry point. Again, this is the optimal entry point on this new swing. This is the optimal entry point on this new swing. This is not the optimal level. Okay, so let's now move on to the hourly time frame. All right, this is not looking bad. This is not looking bad at all. Moving averages nicely pointing in the same direction. Seems like price is swinging off the dynamic area. This swing didn't quite retrace all the way up there. All right. Well, you know, not too bad. Not too bad. Let's see what we see on the 30 minutes time frame. All right. I'm actually liking this one better. Okay. Do you see how the swings are way better defined? All right, for the last two swings, price has retested, and you know the dynamic area has indeed held. Well, you know, it did indeed contain the retracement. So I am indeed liking the 30 minutes time frame on the euro against the American dollar. Now let's look into the 15 minutes time frame. No, I don't think this one looks as good. I mean, please mind how the retracements go all the way up to the 100. That's not a good idea. We have a crossover there, okay? You don't want the retracements to go all the way to the 30. Okay, so I'm sorry, to the 100 moving average. You want the dynamic area indeed to hold the retracement. So in this case, I think the 30 minutes time frame is more appropriate than the 15 minutes time frame. This is the 15 minutes time frame, guys. I'm gonna show you now the 30 minutes time frame. There it is. Do you see how the retracements are held by the dynamic area of support and resistance? So again, if I was to pick, or if I was to trade the euro against the American dollar from an intraday point of view, I would select the 30 minutes time frame, at least for this currency pair. Okay, so I like the 30 minutes time frame, and I also like the daily time frame. From a long-term perspective, the daily is looking good. From an intraday point of view, the 30 minutes is also looking good. So there goes two quick notes on my notepad. I know that the euro against the American dollar, 30 minutes looking good for today, okay, from an intraday point of view. And for the daily, it's also going to look good. I would simply need to follow price over the following days on this specific currency pair, waiting for that desired pullback back to the dynamic area of support and resistance. All right. Okay. Let me compress that in. All right. There we are. All right, let's take another look into a different currency pair. Any of these, let's pick any random one. I don't know, this one for example, the sterling pound against the New Zealand dollar, for no particular reason. Let me expand that out. Now let me zoom in. Okay, and scroll forward. Okay, here we are. So the indicator is calling an uptrend on the very shorter time frames, on the 5 minutes time frame, then downtrends on the longer time frames, and no trend whatsoever on the intraday charts. Okay, 15, 30 and 1 hour time frame. You see, this is how the 3 SMA trend filter indicator can help you. It really speeds up the process. Okay, let's imagine you are exclusively a scalper, okay, a trader that focuses on the 5 minutes, even the 1 minute time frame, okay, very short short-term trader? Well, you know in just one quick look which currency pairs you can trade. Here you know that you have a trend on the 5 minutes time frame. All right. In the other hand, let's imagine you are exclusively an intraday trader. Your favorite time frames of choice are the 1 hour time frame and let's say, for example, the 30 minutes time frame. Well, you know that the sterling pound against the New Zealand dollar is a currency pair you just don't want to trade today, okay? At least from a trend trading perspective, all right? Anyway, so we have again uptrend on the shorter time frames and downtrends here. Let's see which specific time frame is the best looking of all. Okay, let's start off with the 5 minutes time frame. Actually, let's start off with a longer time frames, the weekly. Okay, this is the weekly time frame. Yeah, well, the moving averages are pointing down. They are not really parallel. Please mind how, you know, the direction of the 100 and the direction of the 30, of the 50 and the 30, not really parallel. The waving pattern is not really beautiful, okay? Not really beautiful. I don't know. I don't quite like the way this chart looks like, regardless of the downtrend. I mean, yeah, the moving averages are pointing down, you know, in order, etc., etc. That's why I mentioned before that even though the indicator may call for a downtrend, and it is indeed a downtrend, okay, we can obviously see the downtrend, but that doesn't mean that it's a good-looking trend, okay? So again, that's why you want to confirm the signals called by the indicator. So we are not interested on the weekly time frame. Let's see what's going on the daily. All right, well, way too many crossovers there. Okay, almost a crossover there. Price certainly breaching through the moving averages. No, I don't think this is a trend I would like to try it, okay, as per the 3 SMA conditions. So weekly and daily are out of the out of question. Now let's go for the 4 hours time frame. Alright, this is a whole different story. Do you see that? Please take a look. Please mind how different this is. I mean, you know, the moving averages, this type of formation, how different it is from the, I don't know, for example, the daily time frame. This is the daily. You see how wobbly those moving averages get, okay? And now please look at the 4 hours time frame. On a previous video, we were explaining how to use the moving averages in order to determine what's the best time frame to follow one specific currency pair, okay? Or rather, in other words, to what or to which time frame one specific trend belongs to, okay? So here we compare. If we compare the 4 hours time frame and the daily time frame, we can obviously clearly see from a visual point of view that this is indeed a 4 hours time frame as opposed to a daily time frame. Okay, just because the 3 SMAs, the 3 simple moving averages on the 4 hours time frame just look better. Okay, so I would certainly take a note on my notepad that I want to be trading the sterling pound and against the New Zealand dollar on the 4 hours time frame. And now, just for the sake of discussion, let's also look into the 5 minutes time frame. There we are. Nah, not really beautiful. Again, rather wobbly moving averages. Okay, pretty much the same thing as what we saw a few seconds ago on the daily time frame, just the other way around. This is a wobbly downtrend on the daily time frame, and this is a wobbly uptrend on the 5 minutes time frame. Okay, do you see how those moving averages are, multiple crossovers there? Price certainly breaching and touching the 100 simple moving average. Not my cup of tea. Not my cup of tea. I believe it really looks much better on the 4 hours time frame. So there goes a quick note on my notepad. Sterling pound against the New Zealand dollar. Focus on the 4 hours time frame. You see? That's how the 3 SMA trend filter indicator can help me speeding up the process. Anyway, I don't really want to overstretch this video. It's already running too long, but I believe you get the idea. Okay, to wrap it up, the idea is to go through all the different currency pairs and timeframes where the 3 SMA trend filter is calling for a trend. Take note of those currency pairs and timeframes on your notepad, and then you want to pre-select the very best looking ones. Okay, out of the whole lot, you want to come up with a final list of, let's say, 5, 6, 7 setups, okay, of those currency pairs and those timeframes where you pinpoint the very best looking trends of all. Okay. In order to make sure that you are going to be searching for your trading opportunities at the only on the optimal setups for that specific day. Okay, again, you really want to be selective here. It's great to have a great a broad range of options. You want to do that, but then once you've gone through all those options, you want to cherry pick again the best 5, 6, 7 best looking options for the day, and to focus your attention exclusively on those setups. Simply ditch the rest, guys. Just let them go. Okay, focus your attention on the best on the best looking ones. That will ensure that you take only trades on the most optimal options, and therefore, as a result, the quality of your trading signals is going to improve. And again, as a result, your win-loss ratio over time is also going to improve. Trust me, it doesn't take that long to go through this exercise. Once you get used to it, I personally, can go through all the 28 currency pairs in 20 minutes. Okay, at the beginning of my trading shift, early in the morning, I just comb through all these options, and it takes me no more than 20-25 minutes. Then I come up with my final list. I close out all the other charts, and I focus my attention for the rest of the day on those 5 or 6 charts. Okay. By the way, you are very welcome to download the 3 SMA trend filter indicator. Okay, it is my treat. It's my very pleasure to to help you guys with this indicator. You can find the download link under this video. Now, if you remember, at the beginning of this video I was mentioning that there are 2 ways of spotting those trends. We've just reviewed the old school way, so to speak, okay, the traditional way of spotting trends, which is basically to manually visually comb through the charts yourself. And now I'm gonna show you the modern way, okay, the high-tech way. Okay, yeah, this is my trend scanner indicator. It's obviously customly coded for me by my professional programmer, all right? And it's extraordinarily convenient. I mean, I love this indicator. I just love the trend scanner. It is such a time saver. As you can see, I can place a small window at the bottom of my charting platform, and with just one quick look, I can see in no time which currency pair and on which time frame we can find either downtrends, uptrends, or if it's in gray color, no trends whatsoever, right? So for example, let's say let's pick for example the American dollar against the Canadian dollar. We can see that we can find an uptrend on the 15 minutes time frame and on the 30 minutes time frame. All right, again, just one quick look. In 1 minute I can have a global perspective of the forex market as far as where the trends can be found. All right, no matter the time frame, no matter the currency pair, and I have all this free space on my charting platform to pull out any chart, okay, start trading, analyzing my charts, etc, etc. I just need to leave this little window running here at the very bottom, and I can be updated in no time, again, where I can find my desired trends. All right. If you want to download the trend scanner indicator, simply browse to the advanced indicators section here on the website, and you will find the download link plus the instructional video there. All right. Cheers. Thanks for watching. Bye bye.